Hi guys, it's Any aka the Knock Trader, your friendly neighborhood swing trader, back again with another video. And in this video I'm going to be asking the question, is it time to buy British? So I'm going to be making the case for whether now is the best time to start buying UK stocks. Let's get straight into the video. Before I start with this video, please like and subscribe to the channel. Also leave a comment whether or not you think now is the time to buy UK stocks and what your thoughts is on that. And I've got Facebook, Twitter and Instagram at the Knock Trade on all social media platforms. And if you go into the description section in the area below, you'll see a link to my mailing list. Join my mailing list and you can get priority access to my free training course that I'm developing for people on my website for new traders, and also get early access to any videos that I make, as I'll be sending emails out to anyone on my mailing list first, so you can get alerted on the videos, and you also get to see what I'm trading as I give you access to my watch list. Let's get straight back into the video. So is it time to buy British? In this video, I'm going to be going over some of the points addressed by Tom Stevenson of Fidelity International at the UK Master Investor Seminar that I went to in April 2019. He said that UK stock market represents 6% of the worldwide stock market. But most investors have a home bias, and I'm a testament to that. As you know, a lot of the stocks that I trade are predominantly either US stocks or UK London Exchange stocks, because I know a lot about what's going on in the UK market, and I can understand that most investors probably have have competitive advantage when it comes to knowledge of what's going on in their domestic market, so that's why they'll probably be home buyers. However, the UK has a lot of political uncertainty. As we know, Brexit is going on at the moment, and there's a lot of uncertainty as to what's going on with regards to the economy, as Brexit hasn't been finalised yet at the time of recording this in April 2019. And there's low productivity, which has scared off UK investment, especially foreign investment. But the UK markets are cheap in comparison to the other markets, and in comparison to its own historical value. So right now, a lot of stocks are heavily discounted, but are probably the actual value, the intrinsic value, is much more than what the price that they're at right now. As you know, I've been trading BAE Systems and Standard Life Aberdeen, and these are two examples of stocks that I traded, and I've been making profit off of the fact that they've had a really bad time over 2018, and they were heavily discounted, but the value that I felt that the stock had, plus the technical analysis that I used to look at these stocks, meant that I saw that they were on the way back to where they used to be. The UK shares are offering higher income today than they have over the last 20 years. Yeah, this is a fact. And the FTSE 100 only makes 25% of their sales domestically. So while the FTSE 250 makes about 50% of their sales domestically. So we have to look at FTSE 100 stocks not just as domestic stocks. Though they are listed on the London Stock Exchange, they are, for all intents and purposes, international businesses that that their dependency doesn't solely lie on domestic sales. So the impact of issues domestically may not impact them as heavily as maybe stocks in the AIM or the FTSE 250. So that's something to take into consideration. So with all that being said, what did Tom Stevenson said are the sectors to really look into? When it comes to the banking sector, it was a no-go. And the reason behind that is the banking sector relies really on high interest rates, and as it's been for the last couple of years, and it seems going to be for the foreseeable future, interest rates are really low, and with low interest rates, yeah, it's very hard for them to really generate the type of profits that shareholders would want from these banking institutes to really see it as a viable investment. So he suggested, well, I wouldn't say suggested, but he said that the banking sector is not the most profitable in this current economy. However, the oil and gas sector was an interesting one. They've become more efficient at driving cost efficiencies, because the way they increase profitability isn't through higher production, but more so through the innovations that they have in the R&D sector and ways of becoming more cost efficient, so reducing costs so that they can increase profit margins, and they've been very successful at this. And another thing to note is that the oil and gas sector pay high dividend yields, and they pay in dollars. Now this is very interesting for UK investors, because as the pound gets weaker, the value of their dividends will become more if they're getting paid in dollars. So that's something to take into consideration. So this was just a short video I created on why Tom Stevenson's thinks it's time to buy British.